Welcome back to Primary Source China Investment. We're on show H6 this week, and Peng Guo and I thought, let's talk a little bit about the Chinese consumer, because as we know, the Chinese consumer drives the Chinese economy. So from electronics to video games to cars to stocks, China's consumers are being patient. This was predictable, and frequent watchers of this channel were certainly aware that Beijing wasn't going to magically step in and save or turn around an $18 trillion economy. So it's going to have to be the consumer. And I don't want viewers to interpret this as negative. It's rational. Consumers feel less wealthy given the haircuts they've mentally taken on their real estate. Mind you, they're still probably up 2, maybe 3 times on their investments. But if you bought something at 20,000 renminbi per square meter, then it went to 100,000, and now it's back to 80,000, well, your confidence is definitely shaken. So, Peng Guo, is that thesis accurate in your mind?
I don't know the exact the number, but I think generally speaking, Chinese consumers are definitely interested in the real estate area. So as long as they just realize it brings value, and they will push into the real estate. The similar things for other consumer products. It used to be like the Chinese people get a irrational consumer, the luxury product. So you will see the China probably the largest luxury product market.
Yeah.
But after the COVID and economy depression and consumers really they call like the downgrade the consumption. I think that's more like the back to the normal consumption.
Yeah, so that also gets into this deflation argument, which is the second thing, right? So if you feel like you have less wealth and prices are going down, you're going to keep your hands in your pocket because of better prices on the way. And let's just look at autos. For all the headlines that the world is suddenly going to be driving BYDs, the largest market in the world, China, largest auto market in the world, China, is already flooded with inventory, and the consumer is waiting the manufacturers out. Retail sales were 11.6% lower the same period this year than last year, and 42% lower than in January. So what did BYD, I'm using BYD as a metaphor here, but what did BYD do? Well, they lowered prices. And that BYD Seagull is already about $9,700. So these are inexpensive cars. Not to say that there aren't expensive cars on the by Chinese manufacturers, but the reaction is to lower prices. And it wasn't just the locals. Tesla did it as well, and they saw it coming in January. So if we look at the stocks that are tracking consumption activity, like Jingdong, Pinduoduo, Alibaba, Tencent, they're all down year to date. The only bright spot is TCOM, and I still call this C-Trip. I refuse to call it Trip Group. That's up 20%, and I think we can tag that back to the Chinese New Year. What's your thought? Yeah.
Yeah, I think this should be from the 2 different points. One is China consumer is really like the price sensitive. So, and that's why there's a lot of price war everywhere in the auto industry. So that's I see that one really like the price war. That's cause of 2 things. One is they probably improve the production as well as provide the better product. Another one is cause of the problem. Irrational price war is just simply destroy the industry and make people no profit. I think people is realize this problem, but that is no good way to solve it. So they have one word they call the 卷 in China. That means this like the low competitive competition. But for the Jingdong, Pinduoduo, Baba, those kind of things is I think that's is probably related to the China change the policy for the e-commerce. The e-commerce used to be pretty good. As long as it's get a huge and manipulated market, So it obviously bring the drawback for the consumers. So most, especially for the suppliers, so most of the money made it by the platform as well as a few hundred top celebrities. So a lot of like the offline retailers is get harder to survive. So I think China probably pushes some policies to reduce such kind of the impact.
That's an interesting point because if we look at the broader market and we switch to just those A share names, we said earlier that the sovereign wealth fund can't step in to plug a massive hole that occurred based on the sell-off. Remember, sell-off was, I don't know, pick a number, $5 trillion equivalent, and you have sovereign wealth fund that's worth maybe $1 trillion, and they're already fully invested. So, the home team, so-called home team stepping in is not going to fill this gap. So if we look at where the market's been year to date, CSI 300 is up 2.87, and the CSI 500, remember 300 then 500, is down about a similar amount. So let's call it a push. Market's flat year to date. But remember, go back to December 31st, our show, we talked about what's coming up for this year. We highlighted two of the sectors that investors should be looking at. And we mentioned telecom, which is up 5.39% year to date. And we mentioned banks, which are up 11.4%. China Merchants is up 15%, and it's still paying a dividend of 5.4%. And I think going forward, we're still looking at those sectors. They may not be sexy, but all Chinese consumers and institutions are using products and using services from those two industries en masse.
Definitely, and China stock market reached the bottom. I think right now is bounced back. So this definitely is already confirmed the bottom for the stock market. So the next people just observe how high it could be reached and how long it could last. A funny thing is a journalist asked the questions for the chairman of the CSRC, so Wu Qin. So Wu didn't answer the question how high for the China market could reach for this year. But he just lifted the right hand and show five fingers.
What that means? What
5,000.
index index to 5,000?
Let's see.
Yeah, I'm sure he will leave himself some wiggle room if that doesn't happen. So with that, we're going to leave it with show H6. Thanks for tuning in, and we'll see you next week.
Thank you.